Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to our weekend edition, our first weekend edition of Power Trading Radio for 2020. My name is Merlin Rothfeld, and of course, as you can see here, we have in studio the ambassador of opportunity, John O'Donnell. Welcome back, John.
Thank you, Merlin. Welcome back from your vacation.
Yeah, it's good to get out of here for a little while and travel the world a little bit.
Change the scenery.
Didn't go to Iran, luckily.
Didn't go to Iran?
No, didn't go to Iran. I was in Puerto Rico. It was kind of fun.
Well, that's good. If you went to Iran, you got out of town in time, so congratulations.
You know, it's kind of weird. You look at what we do as an educational organization with Online Trading Academy, and it's about knowing that if you have somebody to show you the way, you can help you get to your goals much quicker. And this is a weird side tangent, but part of my stop when I went to Puerto Rico, I went and visited my friend in she's actually from Fort Lauderdale. She was in Orlando, so hello, Chelsea. She was a season pass holder at Disney World. And I've never been to Disney World. I'm not in the princess thing, whatever, but I love the designs of the city and how crazy all the little Epcot Center is and stuff like that.
Sure.
And I know that if I went by myself, I probably would have gotten on like 3 or 4 rides, maybe over the course of a day. And she is an absolute seasoned veteran. She knows her Disneyland better than anybody, or Disney World better than anybody. And all day, she's on an app. She had us, we probably went on 20 rides in a day.
And you had a ball.
Which is unheard of for Disneyland or World. And why? Because I had a mentor, I had a coach, I had someone pointing me. Yeah, I did. I had a great time. I think I went on every ride in Disneyland, Magic Kingdom, and then you have the Star Wars thing, and then we did Epcot Center. It was a great time.
Well, I a few years ago, to your point of the importance of having a mentor, or in this particular case, a guide. Who I took a tour of the Vatican.
Uh-oh. Did the Pope slap your hand?
No.
Just checking. I want to make sure.
No, this was several years ago, probably 10 years ago. But I was just amazed and I was raised Catholic, but I was amazed in the Vatican tour, going through the Vatican Museum, and oh my heavens, I mean the amount of artwork.
Oh yeah,
and
room after room after room.
And the history of all that artwork, almost all that artwork was donated, or the
Really?
church, almost all of it. Or the church was the patron.
That wasn't sieged in some conquest?
Not that artwork.
Oh, that artwork. Okay, different artwork.
Yeah, that was from a different century, perhaps. But the professional guide who was talking, he kept talking about Latin, and he says, and such and such were Latin, and that was the. And I said, well, what happened to Latin? He says, what do you mean, what happened to Latin? He says, you're using Latin today. It's English. Latin is not dead. Almost all your English words have Latin roots.
Okay.
Almost
Sure.
all of them.
Yeah.
And so I felt that was very. But the
You wouldn't have known it if you didn't have someone there to
but
tell
the
you.
education. By the way, there's a new movie out on Netflix. You have Netflix?
I unfortunately do.
Well, there's a great movie which I believe was actually shot in the Vatican. It's called Two Popes, and it's a fantastic.
Wasn't he a famous rapper?
No.
Oh no, it's Tupac. My bad.
This is Two Popes. That's terrible.
Oh, thanks, folks. We're here all week.
Okay. He does not know what he's
All right, two pubs. Come on.
Anyway, you need to go. It's about the previous pope that resigned and the new pope that came in, and there's a bunch of backstories about both of their childhoods. But the whole movie there's no way you could recreate this stage in Hollywood. It would just be impossible. But as I went through the Sistine Chapel, they take you through these various entrances and exits. Those are the exact entrance and exits that I went through on my visit.
That's fun.
And, but what a wonderful experience that was.
Yeah, well, I've done it once. It was a long day. Anything new, noteworthy? What do you want to talk about today? Obviously, thanks to the viewers. If you have questions or want to steer the show today, we're watching you right now. It looks quiet out there. I see Ruben's on our Power Trading Radio YouTube channel, and hello, Gizmo and Chris on your Online Trading Academy YouTube channel. If you guys have questions, send them on in. You want us to discuss a topic, let us know what it is. Obviously, we're going to not talk about religion or politics, but maybe the impacts of politics, but not take sides on any one particular party. So if you have questions, send it on in. What's hot on your plate? Anything interesting you want to talk about?
Well, we got a new year. I mean, we could talk a little bit about what were your biggest surprises of 2019?
Yeah, okay. Well, that was pretty easy for me.
And then, what do you kind of look peeking around the corner? What do you kind of think about 2020? What kind of either companies, sectors, commodities are you excited about? Do you think we finally got a bottom in the marijuana category, Merlin?
I'm not 100% set on that one either. As far as market prediction, or what shocked me the most in 2019 was the actual market returns, the resilience continuing to put in new market highs. As we voiced in the past, I believe that a tremendous amount of the market gains that you saw in 2019 were a direct result of market manipulation. Now, that manipulation coming in the forms, from my perspective, of share buybacks. We've talked about that before, where companies will buy back shares, they retire those shares, so they're no longer in circulation, and all of a sudden now earnings per share numbers jump, so it looks like earnings are doing great. And we've seen this trend continue. At some point that will probably stall. I think that was a shock to me. I actually was anticipating 2019 being a down year, if you guys may recall. I just felt that we were a little too long in the tooth. Of course, if you look at the orchestration that the current presidential administration has done, it's been absolutely fantastic with regards to choreographing punches and using the market to, not that they're bidding, but understanding, okay, if I do this, if I create let's say I start a trade war, and I know that when things start to look really bad, I can say, well, we've got a deal, and all of a sudden markets will rally 5 points. And then a few days later, we can say, we really didn't have a deal, sorry about that, and it drops 1%. So, you get this really beautifully orchestrated machine that I believe has pushed these markets up. Of course, now we have attacks on Iran, which we've seen historically other presidents do when they were under impeachment to try to distract. Who knows if it was really a desired outcome? I know nobody should die in this stuff, but I don't know if that was a good guy or a bad guy. Our media is portraying him as a bad guy, but who knows? I don't have all the facts to make that assessment. Bottom line is, I think that this is a chess game of setting up 2020 to have that same sort of reality TV show which would push these markets higher. However, I think that there will be some political disruption in 2020. I think that there's going to be much more chop. I think we're going to have wider ranges for 2020. I don't see us having much of a gain. If anything, we might probably end right about where we are, I believe. But I think you're going to have very large swings over the course of the year as political events and political parties stake their claim on what's going to happen in 2020.
I think you're right. I think 2020 is going to be in a trading range. I think because it's an election year, I think it's going to be a volatile markets. I think the markets are going to be kind of crazy. Whether it'll really get crazy if this situation in the Middle East starts to accelerate. Somebody some analyst put a message out on CNBC this morning talking about $150 oil.
Right. Yeah, I saw that.
That would be kind of over the top.
Well, not if you're long, because right now we're currently at $63 a barrel. So.
Yeah, but that's almost adding $100 to it.
Yeah.
But I don't know if Iran, what's Iran going to do? Embargo oil? We've already embargoed them anyway. But at any rate, is that a possibility? Yeah, I guess it's a possibility if that thing blows up again. The thing that bothers me both. So I was listening to Bill Addis's XLT session today, and he did a recap. In a mastermind session on what happened in 2019 in the bond market. He did a very good job of looking at the yield curve and looking at corporate bond rates and the size of the amount of BBB corporate credits that are like on the borderline of being junk. And it brought to my mind that I think one of the biggest factors is going to be, and by the way, corporate earnings have been down. Corporate earnings have not been going up for the last 3 quarters. They've been really going down, and regardless of the amount of shares outstanding. But I think corporations in this era of cheap liberal credit expanded too much, bought back a lot of shares. They also expanded too many stores. Those stores are now closing. Over 10,000 retail establishments closed in 2019. I think we're going to see more of that in 2020.
More retails, which would, if that's the case, and that would definitely point the finger at companies like, let's say Walmart, because their online presence, and Amazon, obviously. So they think that would continue to garner a lion's share of those shutting down of malls?
Well, not only the malls, but they've got all these little strip shopping centers
Yep.
and these little places that have. But even in the fast food category, thousands and thousands of fast food joints are closing because of cost of labor.
Uh-huh.
And but the J.C. Penney's and the Sears, some of these companies ought to be put out of their misery and redeploy the. Why prolong the agony? So I
some
think
CEO needs to be making $50 million a year. That's why.
But the one that Bill Addis brought up that gives him the most alarm, or at least is what he said in his piece today, is the muni bond market in 2019 has now brought the muni bond category over $491 billion. Never before has it been this high before. And the problem is with a lot of these retail, with the tax base of these cities eroding, these municipalities are probably going to have a hard time if we are to have a recession. How are these municipal bonds going to get serviced if the tax bases erode? So he was talking about the BBB corporate credits as a high risk factor. The muni bond market is raising its head as a high risk factor. And but all that being said, bonds were outstanding. When you look at total return on bonds, both capital gains and income, bonds had a record stellar year.
Sure.
They were
Which
tremendous.
makes sense because we're one of the few that has yields. So, of course, there's going to be more people buying our products.
Well, yeah, I mean, that's right. And, of course, that gives you the capital gain.
Right. So, where are we going to end in 2020? Equity markets, S&P 500, what do you think?
I don't know. I mean,
Of course you don't know, but
but I don't know. But could it? I think it'll be in a trading range. What's more important to me is not a stock market; it's a market of stocks. I would prefer to take some energy, some intellectual energy, and try to figure out which individual securities are going to be a winner.
all right.
Not necessarily just the S&P, or the Dow, or the Russell.
Do you think that there's going, are there any specific sectors out there that you think might struggle in 2020?
Well, I think the marijuana industry is going to continue to struggle.
Okay.
I'm not particularly wild and bullish on Bitcoin. I think it's going to be in a trading range. I don't think it's going to, totally collapse like some do, but I think it's going to be in a trading range. I don't see any spectacular gains in Bitcoin ahead. Do you?
Not unless something fundamentally changes on the usage of Bitcoin or cryptocurrency. So, if we get to the point that somebody like Walmart says, you can pay with Bitcoin, then all of a sudden, what you need is one big player that will allow that, and then all of a sudden it would be a big surge for it. So, but it's not happening yet.
Well, if Facebook could get their crypto launched, or their pseudo crypto launched,
That ain't gonna happen.
well, we'll see. We'll see. We'll see. They're not going to give up.
All right. Other things, Dave, or was it Dave? Who was you? It's Ruben. What sectors are you looking at? Well, there's a bunch of different sectors out there. I don't know if I have any real favorites as far as continuing market gains. Obviously, I think that the disruption that you're going to see with what's going on with Iran, TJ, you had an illustration earlier. You had a chart of the world's global top oil producing companies. I know this is old. This is as of 2018. We haven't updated yet, guys. We're only 3 days in the new year, so we haven't gotten the new charts yet. But you look at this one, and obviously U.S. the leader, which is awesome. But you look at Iran, 4%. So 4% of the world's global oil coming from Iran, and I think a lot of people are, freaking out. You're hearing right now that oil 150. That's not just because of the Iranian situation. That obviously means that we could see more problems in the Middle East. So all of a sudden, you could have the UAE, Iran, Iraq, Kuwait. Those countries start to not necessarily band together, but struggle, and that could have an impact on supply. So clearly, that may be a problem going forward. I don't see 150 yet. We still have a lot of obstacles to go on that oil chart. But the bigger talk here, and I think this is a question that came through from Ruben saying the World War III rumors, okay? Obviously, this is something that's sprung up recently. Of course, we talked about World War III a few years back when 9/11 happened. Any thoughts on that one, John? People are now talking that this is going to lead to World War III.
first of all, for people that are talking about World War III, are going to probably have to compare it to World War I and World War II. We're not going to have an event like that. I mean, of that magnitude. Could there be another? I mean, that was unbelievable. You know, World War I was worse than World War II in many ways. You know, because it was known as the end all wars, and
Right.
we know what World War II was. 40 million people died. We're not going to have anything like that.
I certainly hope not.
I don't think so. I think the armament is so powerful today, the deterrent to totally take. I mean, where's it going to come from? Will there be retaliation? Yeah, there'll probably be some retaliation. Will we deal with it? We probably will deal with it. I hope this is just not creation of something to facilitate, you know, political goals. I don't know. I don't have enough inside information.
Yeah, and we probably
on that.
won't.
No. Who will? You know, I don't know what. And by the way, I don't have a lot of confidence in our media to sort through that very well either.
Sabrina, let me see. I want to go to this question from Sabrina, but I know we're still talking about the oil thing. As far as World War III goes, I don't think we're going to head down that path. I think there'll be some resolution. There probably will be some conflict, but it will be a world war. I don't believe so. I certainly hope not, because nobody wins in a world war.
I think I think a revisit to the trade war is a bigger threat than a World War III kind of event.
By the way, if you look at defense stocks today, defense stocks were soaring today. I mean, you had 6%
imagine.
gains for, I think it was Lockheed Martin and Northrop Grumman.
Take a look at Chevron and Exxon today. Those were all doing well too.
All right, let's.
But you know, if you think World War III is, you need to own some gold calls, leaps.
So there's two questions. I want to go, the Gaillard's question deals with gold, but I want to get to Sabrina's first. Hello again, Sabrina. She says, do you think there will ever be a point where the market won't crash? This is an easy answer.
No, I don't believe that'll be the case.
It's impossible.
Yeah.
There will always be the potential, 100%, for the markets to crash. It may not be today, it may not be next year, maybe next decade, but there will always be market crashes. So.
Yeah, and you should always plan that way.
Yep. Always be on the defensive, you know, whatever your investments are, you know, and I've said this 2 years ago. I said it last year. It's like, as we continue to become so extended, TJ, you had the charts up there earlier. You know, I think the more that this chart happens, make this a weekly. You have it on a daily. No, make it a monthly. You guys, you can see here, these are those two big market peaks in 2000, huge crash, huge rally, huge crash, and then all of a sudden, this is that old phrase, one of these kids is not like the other, right? You have this monstrous rally. So at some point, this will crash. You are going to see a big, big crash. I don't know when it will be.
Well, I remember in 2000, we were saying that we're at the dot-com era.
Yeah.
You know, we got the internet now. There's, you know, and we have the ability to just print money, and it's not a big deal.
Right.
What people don't realize is that just printing money with central banking fractional reserve model can ultimately precipitate a crash.
Right.
Just because you have
Fuel the
control,
bubble.
Yeah. And no, that's a childish perception that there'll never be another crash.
Also, it's childish. It's just you don't know. There's always a potential for a huge market rally. Always a potential. I mean, that's the beauty of financial markets. And as John pointed out, it's really critical to have a strategy in place if that happens. I mean, you look at a lot of the training for airplane pilots, and it's not just how do I fly the plane, it's what do I do if this engine fails? What do I do if all of a sudden I have low oil pressure here, I lose cabin pressure? It's always it's almost more important to understand what to do when the doo-doo hits the fan than actually how to fly that plane. So
it's always about driving defensively, isn't it?
Especially down here in Southern California. So yeah, I'm not so worried about a market crash. Let's be totally honest. I actually would love a market crash because there are people out there who don't understand how shorting works or how to make money when markets drop. Sadly, the vast majority of citizens in the world, I usually say Americans, but it will be everybody will be impacted by it. If we get a 30 or 40 or 50% drop in the equity markets, there will be a ton of people who lose a lot of money, especially in the retirement and 401ks. If you know what you're doing and you position yourself properly, you can actually make a lot more when those things fall because it falls faster normally to the downside. So, and then it creates great buying opportunities. So I'm ready. Let's have a big correction. Let's start all over at the bottoms. Let's go to gold. Gold, one of the topics, is near and dear to Mr. O'Donnell's heart. This is a monthly, so I'll zoom in here in just a second, but you can see it's been on a nice tear in 2019. Let's go back to the daily, TJ, so we can see more detail to what's been happening. You guys can see today, global uncertainty is certainly a factor in this one. We are coming up into these highs that we experienced back in 2019. That's back to September. That obviously is going to act as a little bit of a challenge for price to get higher. But after that, you guys can take a peek at this one. We've got a lot of smooth sailing, if you will, not a lot of major obstacles above us before we start to look for higher supplies, which are going to be well near that 1,700 mark. The line from Gayer, who is on Online Trading Academy's YouTube channel, and hello Gizmo and Sabrina, Chris, and Leighton. What do you think of gold? Will it go higher?
Well, if the events in the Middle East are going to tell you what's going to happen with gold in the short term, if the events in the Middle East are going to accelerate, if this is the start of a whole new chapter of geopolitical risk in the Middle East, Middle East 2.0, whatever you want to call it, gold is going to continue to be a flight to safety trade, as will the U.S. dollar, short-term treasuries. But no, there's a lot of potential left in gold. I mean, people forget gold at one time back in 2011 was over $1,900 an ounce.
Yeah.
So there's a lot of room for gold. But I think short term, if this is just going to hit the press, have 30 days, little bit of press fighting, and then dissipate and go away, and we go about the election, gold will probably retreat back a little bit.
I'm a little bit different on that one. I actually think the gold is going to continue to the upside. It's interesting. We talked with Don Dawson on the show, and he was fairly bearish in the middle of 2019. I'm pretty bullish on it, and here's some of the reasons why. I believe that there's going to come a point when people are just looking for safe havens to park their money. It's the historical flight to security that we see happen, and they'll teach in any university around the world. Gold is that flight to security, or one of the major ones. So we now have a situation where the United States is escalating global conflict. We are also escalating global tensions with the trade war, which we can make arguments that it's good or bad. That's not the point. The point is it's escalating tensions with major countries around the world. You also have an equity market which is extremely inflated right now and has been propped up with a low interest rate or zero interest rate policy for a very long period of time, even though it's rising. So you've got an equity market bubble, you have a housing market bubble, you have a bond market bubble, which is also normally a target as a safe haven. If those things collapse, and heaven forbid they should all collapse at the same time or come to a head at the same time, you're going to see a big run on safer, tangible, physical assets that I can hold in my hand. Gold, I think, would be one of those. I think a lot of precious metals as well, so you could be looking at silver, platinum, palladium, or other metals might do very well in that period of time. But I think that time is quickly approaching. It feels like things are just heating up a little bit more. It is an election year, so again, we don't know what reality show this is being played out right now on us because our president was a master reality show host. So, part of this could all be orchestration, but it feels like that tension is building and building and building. Maybe we can go in quote unquote in the TV world to a commercial break and it all subsides and everything's great when we come back.
Yeah, but what do you think in the short term is going to happen to gold? You mean regardless if we have the conflict in the Middle East accelerates or decelerates?
Well, I think you'll probably have some pullback here. I mean, it's gone from 1,200 to 1,550 in a pretty short period of time. But I do think that you'll see this trend start to move back to the upside, and gold is a good buy.
There's another factor there too, which is central banks are buying gold again.
Right.
Okay, that's another factor in your list of bullish cases.
My list of bearish things for gold. Let's see, bearish. What would you make some arguments as being bearish for gold?
Deflation.
Bitcoin? Digital gold?
Deflation.
Deflation, okay, all right.
I mean, no, but but with the role of central banks remember the trend in negative yielding bonds in Europe, that doesn't seem to be going away.
No.
That looks like it's well in place for 2020. The ECB is not moving in the direction of changing their quantitative easing. What do you think is going to happen with the repo?
I think you'll see the Fed continue to just do whatever they have to do to not let that repo market collapse. I think that's another one of these kind of bubblicious type of events that if the repo market isn't supported then we could have a systemic failure. And of course, we know that the Fed is not going to let that, because one of their mandates is, make sure we have a stable financial system. So
they came out to announce. Powell came out with an announcement today that they're not going to raise rates in 2020.
And you believe that?
No, I don't believe that. I'm just.
I don't believe anything the Fed says at this point.
Well, they were going to be data dependent, weren't they?
Yeah, right. Mm-hmm. Full employment's at 5.5%.
Well, they were going to raise rates in 2019. They didn't even get close to that. They cut them.
I was going to do a commercial break, but you know what? We're going to start this weekend edition off with no commercial. We're going to go all the way straight through. You ready, John?
Sounds good to me.
All right. Who needs sponsors and marketing dollars anyway? Jim sends in this one. Could you expand on some of the key elements in your trading plan? I'm definitely one of those sticklers for trading plan, just like I am for planning in general and anything we want to do. If you ever hope to attain whatever your goals are, whether that is learn a language, travel around the world, you name it, a plan will help you get there faster, or at least identify how to get there faster. You have to put in the work and the effort. So yeah, I've been a stickler for that since the early days on the trading floor with John O'Donnell back in '98 when I started. My mentor was saying trading plan is the key, it's the answer, it's the solution, because it keeps you guided down that path. What are some of the key elements? Well, it should be broken into two different pieces. Number one should be your overall trading plan. Identify why you're doing this, right? Why are you trading? What are you hoping to accomplish? And let's not say to make a bunch of money. That's the obvious one. There's other reasons why. For me, it's the lifestyle it affords. Number two would be, what's your strategy and tactics? What are specifically? Write them down. I want on a piece of paper, here's how I'm drawing out, here's how I'm doing my thing, whatever it is. With Online Trading Academy, we have a specific strategy that is step 1, step 2, 3, 4, 5, 6. If you're an Online Trading Academy graduate, then write that down in your trading plan and make sure you review it so you know every time what those steps are. Number two should be, how do you go about evaluating performance, right? Go back through, analyze your trades, understand and learn from every losing trade you make. They're the most valuable lessons you can get. It should establish your risk management rules, your money management rules, how much you're willing to risk per day, per trade, per week, per month. Establish your goals. Those are the most important things in it for me. I also put in things like, if there's certain companies or securities that I have had issues with and struggled and just can't seem to make money with them, I have a blacklist. There's only 2 companies on that 2 specific names on that blacklist right now. One of those is Apple, the other one is Cisco. I will never trade those ever again. And any biotech or pharmaceutical stock is also removed from that list. Anything to add on that one? You got any rules for that you kind of, what do you think should be in a trading plan that was outside of what I mentioned?
Start slow.
Okay.
Okay, and recognize that this is a marathon, it's not a sprint. And don't set unrealistic expectations on yourself, because there is a very steep learning curve to this. Mm-hmm. And I would make the case, unless you have a decisive, disciplined trading plan, your probability of success is quite small.
Yeah, one of the things that from a teaching perspective, this isn't normally in my training plan because I was beyond this at that point, but I would say as an instructor, when you come into the physical classes, there's a lot of golden nuggets that are put in there really to help you achieve whatever it is you're trying to achieve. And John's right, progression and the way that you progress is critical. So we encourage you to start very small, right? Start with 100 shares of something, and don't start with 100 shares of Google or Amazon. Start with something that doesn't move as fast. Maybe it's an ETF that has some more less volatility. Start with 100 shares and set a stop loss that's okay with you, meaning you're not going to lose a lot of money, and then stay with that for, let's say, 30 days. Apply the same strategy, same thing over and over again, and see what the results are. If you notice that you're positive, well, okay, is there something you could have tweaked to make that better? If so, then maybe you want to go back in and make those adjustments, and then maybe you start to scale up. But if you make money one day on 100 shares, and you're thinking, wow, if I just add a 0 to it, I could be making even more, so let's go to 1,000 shares. That's what idiots do. That's how people lose their money. We've seen that happen back on the trading floor back in the late 90s. So it's about knowing that if you progress slowly, you will understand what you're doing, you won't make big mistakes, and you'll get to that point that you want to be at. Novices will start off going, oh, they told me slow, and they go slow for 2 days, and then they go straight to full speed, and they blow their accounts within a matter of days or weeks or months. So that's a good point. All right, Dave. Let's see. Dave says, I seem to be setting trades lately, which seldom reach my zones. So losing faith in my trades. I'm basically struggling with how long to hold a trade. So if I think I can rewrite this one saying I'm setting up trades, which means you have your entry, your stop loss, and your price target, and it doesn't seem to be reaching my targets, and you're getting frustrated because maybe it's giving back a lot of profits. Any suggestions on what someone might want to do there?
Well, you're making a big assumption.
I am.
You're making some big assumptions that he's using the core strategy of Online Trading Academy.
That's true.
Is he using the core strategy of Online Trading Academy? Or
I think Dave is a graduate, yes.
He is a graduate.
I believe so.
So is he frustrated because he's not getting his entries?
No, I think the entries are there. I think it's what he was saying once he gets in. So I'm seeing you setting zones, which seldom reach my zones, so losing faith in his trade. So it could be either or. It could be the entries or the targets. So if that's the case, I would say if it's the entries that are the issue, I would probably go back and revisit. I don't know if, Dave, if you have XLTs. Oh, so he's talking about, it is about targets. Okay, so you've got your entry, you're in, you got your stop loss, everything's right. Now you're saying, I've got my target up there, let's say it's 5-1 or 6-1 or 8-1, whatever it is. What do you do? Well, you obviously want to stay with your original target. And there's multiple things that you could be doing in class, and we talk a lot about these with regards to trade management. One of those is you set a mechanical stop. So as price is moving up towards your target, you're in profit now, you're using stop losses, and there's specific ways to calculate those, which we cover in class, but you would be using that stop loss to incrementally lock in profits along the way. There's mechanical, there's technical stop loss as well, which will trail. And then there's also another consideration, which is scaling out, like saying, okay, if my target was 5-1 and now I'm at 3-1, maybe I close out a portion of my position. These are all pieces that need to be kind of figured out beforehand. But we all know that you're most likely not going to enter in a trade and always hit your target, right? It doesn't always happen.
Right.
We set that as an expectation, and that's why generally we're going to try to make our targets a little bit larger, and then we may actually get out much earlier. So I would say start using multiple targets. Again, in class, Dave, we go into a lot of multiple target scenarios, which is much more beneficial from your psyche perspective because you're hitting targets.
Yeah.
Yep, John says yeah. John says yeah.
I would agree.
All right, do I got any other ones that come through? Let me last minute questions here. The market's so focused on Iran and things today. Someone asked me about the ISM manufacturing report and said how bad was that. Pretty bad. I mean, the ISM manufacturing PMI numbers that came out for the U.S. previous month was 48.1. Remember, anything below 50 means that there is a contraction, an expectation of things getting worse going forward. So you want to be above 50. We were at 48.1. The expectation was 49. We came out at 47.2. So it's continuing to get worse. You guys have heard me talk on Power Trading Radio how this is definitely a focal point for our markets going forward. If manufacturing numbers start to slide, if earnings numbers start to slide, if production numbers start to slide, then this wonderful all-time high market rally that we see may come to an end. So yeah, I don't think it was appallingly bad, but it is a bad sign that we didn't get above 50 and we actually slipped even further to 47.2. Manufacturing, John, so jobs.
Well, I'm not so worried about manufacturing jobs because manufacturing now, as a driver for jobs, is pretty small part of the economy. This is a service-based economy nowadays,
Yep.
and I'm not so concerned about manufacturing jobs.
Well, that's like it might be the first time I heard you say that.
Well, that's the way it is.
You love jobs.
Well, I like jobs, but they don't have to be manufacturing jobs.
Okay.
Okay, I mean, don't get me wrong. I want everybody to be gainfully employed and be productive and earn a lot of money and will facilitate their consumption if they're a producer. But that doesn't mean you have to have a manufacturing job.
Okay. All right, I like it. Chadsberry on Online Trading Academy's YouTube page says, what's the pathway to find classes? There's a lot of different ways you can find classes on Online Trading Academy. The simplest and easiest way would be to click that link that will probably be showing up in social media. Thank you, Joanne, for helping us out today. You can click on that link that'll tell you which of our 48 physical brick and mortar schools are nearest you. Not only do we have physical brick and mortar schools, which is my favorite because you get to actually go sit with the instructors, have a community of students around you. You got a great support team there to help you navigate what you should be doing and support you in your journey. But if you're in a remote location and you can't really get to one of the physical locations, we have online classes as well as a robust arsenal of self-paced content. We have core strategy and futures right now are self-paced. We are working right now on strategic investor, which will be self-paced as well. Down the road, we'll be looking at options and Forex as well. So that's one way. You can click that link right there to find out more information about classes. There's free classes, paid classes, community events, and much, much more.
By the way, I just took the strategic investor class online, and I'm very impressed with the new structure.
Nice.
I think we've done a great job of adapting that whole structure. And I watched, by the way, last night, for those of you that are trading options and are a member of the Online Trading Academy community, Russ Alan last night, I think it was about 4 p.m., did a 2-hour session and gave a whole preview of how our options class and strategic investor is going to be adapted in 2020. Nice. And he did an incredible job of transparency. So if you want to know what that's going to look like in 2020, go watch the XLT that Russ did last night about 4 p.m.
Cool. Are you doing anything this weekend, John? You going somewhere?
No, I guess the bowl games are almost over. Of course, we got the big game coming up. Who do you like in the big one?
Which one? The Niners game isn't for 2 weeks.
Oh, Clemson. Clemson.
Oh, I don't care.
LSU.
I don't follow.
You don't
nah,
follow that?
Nah. NFL, baby.
Oh.
Big boys. All right, John's not doing anything this weekend. I'm not doing anything either, so it'll be a quiet weekend out there for us. Hopefully you have a great weekend. Again, if you'd like to take a workshop or a class, you can click that link that's in social media right now to find out more information about which online trading academy is closest to you. To tell you more about what's going to be happening this week, we will bring up next week, we'll bring you the calendar for Monday, January 6th. Not a ton of information going on. We have the ISM manufacturing PMI numbers. Monday, we get the non-manufacturing PMI numbers, as well as services PMI for the U.S. The Euro has final services PMI, Syntex, investor confidence, and producer price index. Canada coming out with the RMPI numbers, and then we switch over to our earnings calendar, which is a little bit slow. Commercial metals is the only thing reporting on Monday, so boredom on that front. But as John mentioned, Russ Allen, strategic investor, he will be our guest on the show Monday talking about strategic investors. So if you have any questions or comments or would like to join in that discussion, let us know. We'd love to have you part of that show. Until then, happy trading, everybody. We hope you enjoyed this edition of Power Trading Radio. We're going to have a great weekend. We hope you do too. We'll see you Monday.
Peace.
We're out of here.